Hi, this is Randy Finney with the Right Side of the Chart, and today is Thursday, January 17th, 2013. And in this video overview, I'd like to take a look at the energy sector and a couple of the key components in that sector. The energy sector, as most of you know, is one of the largest components of the broad market of the S&P 500, and it includes the single largest holding in the S&P 500, which is ExxonMobil. So very important sector to watch, and one that I believe is at a critical inflection point or key technical juncture here. So let's take a look. We're starting out here looking at the energy sector. I'm going to start actually going out to a monthly view. We'll work our way in, and as you can see here, basically we're at a very large, nearly symmetrical triangle pattern. I'll talk on XLE in a minute here. That's the ETF that most traders use to trade the energy sector. So this is the sector as a whole, and as you can see, nice symmetrical triangle there. A couple things to note here is one of those is the MACD. If we take a look at the MACD, I use a lot of indicators that I take a look at when evaluating the charts, but usually on the site I'll put up the MACD, the RSI, and a few others. And I believe in the old keep it simple strategy. Use a few indicators, know them well, and use them often. The MACD is one of the most popular out there, and that's because it's very effective. And one of the things to look at here is the posture of the MACD. The dotted line here is the zero line, and typically when the MACD is above that zero line, that's in bullish territory. As you can see, if we zoom back a little in time, the last time the MACD spent any significant amount of time under the zero level was back here in early or mid 2002. It crossed under, and we had a bear market. Keep in mind, each of these are monthly candlesticks, so we're talking several months here, really about a year of a bear market there in the energy stocks. And let's go back to where we are today, and the only other time since then that the MACD has spent some time down in below the zero line was during the last bear market, and stayed under there for quite a while. And so just something to keep an eye on. We're skating right on top of that level now. Another thing I like to look at on monthly charts, this works well for the SPY, the tracking ETF for the S&P 500 as well, is the rate of change 12. And when the ROC 12 is in negative territory, if you can look here, we'll zoom in a little bit, that typically defines bear markets as well. It went negative back here. This is all the way in 91. We had a bear market in energy for a couple years there, which was defined by the ROC 12 being under that zero level, as the red histograms indicate. Another bear market there. So as you can see in the past, that's done a pretty effective job, that is, of defining bear markets. And we've pretty much been in that level for quite some time now, going back to 2011. Yes, the energy market really hasn't gone anywhere in that period of time. We're right about where we were a couple of years ago. So that's really neither a win for the bulls or the bears, but just something to note, because we continue to remain on a sell signal with that ROC 12. Okay, let's jump forward here and take a look at the weekly chart. There's that triangle, very clean on the weekly view, very clean symmetrical triangle, and prices are right at the top of that. So we'll just have to respect this whichever way it breaks. If prices make a solid break to the upside, obviously that is bullish, especially if it can follow through. We are getting a bit stretched on a lot of the stocks and indices, so possible to see a breakout, pull back to retest that triangle and a move up. But where this goes will most likely define how the market and the energy stocks trade in 2013. So something to watch. And again, we are right now at key resistance level, so that is a caution sign to those who are long. If you're of the bullish mindset right now, you might want to watch for a breakout, and that would be a long entry, of course, if some other things confirm as well. But very important triangle to watch there on the weekly time frames. And now zooming down to the daily time frames, let's take a look here at a couple things. This is a daily chart going back to early 2011, so we're looking at 2 years, at least 2 years in history here. And what I want to focus on this chart would be the RSI. I talk a lot about overbought, oversold readings. Very simple but effective strategy. These are not in themselves complete and utter buy or sell signals. They're not timing indicators, but they are caution on the long side, or a lookout if you're planning to short or looking to get into some of the energy stocks short. Look at these overbought readings. I took white arrows and I marked every true overbought reading. The typical or traditional definition of overbought on the RSI is a reading of 70 or above, and so that's what these white arrows mark. And if you follow the vertical line up, you'll see that these overbought readings each and every time have signaled significant tops in the energy sector. So they were great sell signals by themselves, stand alone, but of course you want to use these in conjunction with other indicators if possible. And now something else that I do in trading is I'm not completely rigid on what defines overbought and oversold. In other words, 70 is typically the overbought reading on an RSI, as 30 is the oversold reading, but that changes with every security I look at. Some stocks have a history of going up to 80 or more on the RSI before you get a true overbought reading and a correction. And some, like the energy sector here, I've noted in these yellow arrows readings that fell just short of the 70 level. So we could really say that maybe 75, 78 is overbought in the energy sector, because if you take a look at the yellow arrows, you'll see that those have also led to significant tops, in some cases even larger corrections than some of the white arrows. So again, just something to note that we don't have to have it. Doesn't have to be a line in the sand that 70 is overbought and anything less is not overbought. I bring that up because where we're at today, we're at almost 68 on the RSI, and that level in the past we've seen significant corrections start from that level. So something to keep an eye on there. Yeah. So basically, what we're looking at here is, just like I've mentioned the financials and some other sectors right now, overbought at resistance, which I know the masses out there are extremely bullish right now. The price action is undeniably bullish, but trading's all about risk reward, folks. It's that simple. And when you look at past history here on these RSI readings in a stock or an index being up at key resistance while overbought, you have two very strong caution, at the very least caution signs. Now, overbought can get more overbought, and it often does, especially in uptrends. So if we broke out above this downtrend line, it's very possible for the RSI to continue to be overbought, maybe pull back in, push up again. But again, from a pure risk versus reward perspective, you don't want to be chasing many breakouts here, at least not very aggressively. And if you do, at the very least, just make sure you have your stops in place. Okay, and while we're on this sector, one of the nice features about this TC2000 charting program that I really enjoy is the ability, when you're looking at a sector or an ETF, to open up a list of all the holdings or components of that sector, like I just did here. So we're looking. I'm not going to go through all the components, obviously, but I do have a few of these flagged. These little blue flags are symbol stocks that I've been watching. So let's take a look at those real quick, because these are possible trade ideas for those of you that prefer to trade individual stocks versus the sector, because I'll wrap this video up with the XLE, which is the ETF for the sector. This is WNR, Western Refining, and overall this to me looks like a bearish chart. We have this large rising wedge pattern. The orange here within the top of the wedge, if you look down below, you can see that we have some negative divergences in place on both the MACD and the RSI on that rising wedge, getting pretty extended. I can easily see prices continuing to push higher within this wedge. In fact, if you look at the RSI down here and the MACD, we could easily make one more push up to the top of the wedge before coming back down. But overall, unless these divergences are negated, meaning the RSI and the MACD move above. This pattern looks like it's getting close to breaking down, so that's WNR. Overall, I take at least a near-term cautious outlook on that one. PWE, this one was a recent long posted on the site. I own PWE personally, took a little bit of that. I like this for a longer term trade. It has a nice dividend yield of 10.5%, and this was a bullish falling wedge pattern. Strong positive divergences in place. Again, take a look at the static chart. Just use the post by symbol feature, the drop down box on the site, to take a look at this, and I'll share some of the notes on that trade on that recent post. One other thing just to add to this stock that I do like, unlike so many others right now, this stock is far from being overbought. In fact, it's been in a downtrend, and it still is. That's something I cautioned in the most recent post, that I could see. I do have a scenario that prices could come down a little bit more, make one more low around the $10 area, and then head up. But either way, since it's been in a downtrend, it's not even close to being overbought. So I'm looking at PWE as a potential bottoming play. And as far as longs go, this would be one of my best picks for 2013, assuming that the sector holds up, number one, obviously, and that this dividend holds up. You know, never buy a stock based on a dividend alone. In fact, when you see a very high-yielding dividend, high-yielding stock, typically there's something wrong there. There's a reason that the yield is so high, and over the years I've seen a lot of high-yielding stocks have their dividends chopped, and when that happens, the bottom can quickly fall out of the stock, as most people will exit because they were in that stock solely for the high yield. So never chase a stock solely on a high dividend, but when the technicals confirm, those are a pretty nice trade. Okay, finally, the other one that I have that I'm watching on the sector, I don't believe I've posted this yet on the site as an official trade idea, is Wft Weatherford International. And if you look at here, we're looking at a daily chart with a large descending channel, almost a wedge type pattern. We do have positive divergences in place. If you look down here at the RSI, the MACD, you do see positive divergences. We can see that a little more clearly on here's a 2-day period chart, and you can see the wedge pattern there and the positive divergences. So that one is looking good. However, let's go back to the daily chart real quickly. A couple of things to note. The orange lines are the larger wedge type pattern, falling wedge, and we do have this blue sub downtrend line within that larger pattern. Prices are at that, so we are at downtrend line resistance. Again, this is what I'd refer to as a minor or sub downtrend line within a larger pattern. So prices need to get through there. And what I've noticed, let's move this out of the way. These white arrows mark, once again, overbought readings on the RSI. Very simple but effective. Just follow the horizontal line up. Well, the arrows mark it. You can see every time we hit these levels, once we cross that 70 level or higher on WFT, it has led to significant corrections. You know, if you sold here, theoretically, it's hard to do this, but you would cover here, and that would have been your short trade. Or, had you gotten out long, you would have avoided those losses. Again, the next RSI overbought reading was there, and stock fell all the way to this level. Next one was there, and we fell all the way to this level. Oh, I'm sorry, we fell down here, and this was the next one. I color-coded this one orange because we are just slightly above. We're only at the 65.74 on the RSI, so a little room to go. All these other levels were true hits of 70 or above. So again, caution. So what I could see happening here, we could possibly take out this blue downtrend line, push up to this key multi-year orange downtrend line that really defines the pattern, and at that point we'd probably have the RSI at 70 or above, especially if that happens in the next few weeks without any pullback. So one to watch for either a short trade off that line if we do get overbought and the sector confirms a short, looking at the sector charts. And this is also something for longer term bulls to keep an eye on. Maybe after a pullback or consolidation, let these overbought conditions reset or sort of work themselves off a little bit, and then maybe a couple months down the road, WFT is ripe for a nice breakout that can be sustained, and if that happens, I'll add some targets to this trade. Okay, now we're looking at XLE. This is the ETF. Since you can't trade actual sectors themselves, what you can do are buy the ETFs that track those sectors. So obviously these charts are they'll look the same here. This is the XLE monthly chart. Let's take a look at the weekly. Actually, on XLE, I want to look at a 6-day period. A weekly consists of five days per candlestick, one trading week. This is a 6-day period, goes back a little farther on this chart, and there's that nice triangle pattern, symmetrical triangle pattern defined. We are once again at the very top of that pattern, and we zoom now down to the daily chart, and here's a downtrend line to keep an eye on, which once again prices are at the top of. So I've spent more time on the other, the primary sector itself. This is the ETF, so just keep an eye. We're getting overbought and once again at resistance, so something to watch for. Okay, and to wrap this video up, what I'd like to do is I looked at a few of the components that I had marked, went over a few individual stocks. Here's a few more names to watch, and these are the top holdings in the XLE. The largest is XOM. Now again, XOM is also the largest component of the S&P 500. It's even larger than Apple. XOM makes up about 3.1% of the S&P 500. Apple's about 2.4%, so this is a key stock to watch. And as far as the XLE goes, the energy sector, XOM actually makes up 18.47 most recently, so a very key stock to watch if you want to know where the sector is going. Let's just drill down real quickly, starting with a monthly view. This is a long-term channel going back to 1984, so very long-term channel that ExxonMobil broke below during the last bear market, or actually, I take that back, this happened in 2010 that we came below this channel. Price has shot back up and since then have been flirting with it. I have parallel lines defining the bottom of that channel, and we've really been flirting between there. And overall, if XOM makes an equal or higher high, we're going to have some significant negative divergences in place, and we're talking multi-year divergences, as you can see, going all the way back to late 2007. So that's the monthly chart overall, looking a little bearish to me. And again, monthly chart, we're talking longer term. These aren't days or weeks. When you're looking at a monthly chart, I'm trying to figure out where this stock's going over the next 6 to 12 months, not the next 3 or 4 days. Zooming down to a weekly time frame, actually this is a 6-day period chart. I know there's quite a few lines on here, it's a little bit busy, but these are the old highs which XOM failed to make it through recently and has come back in. XOM is lagging the overall market quite a bit, which is something to note, just like Apple. These yellow lines define a bearish rising wedge pattern with clear negative divergences in place down below on the MACD and the RSI. So to me, a clearly bearish longer term. Again, we're looking at a weekly or 6-day period chart here. This is just a downtrend line that I have drawn back to 2002. And as you can see, prices broke below that downtrend line in 2010 when they broke through that monthly 20-plus year channel I had drawn, 30-year channel. Came back up and have since skirted along the underside. So we're below this downtrend line. We're dancing along that monthly channel, and we're coming close to the apex of a bearish rising wedge with negative divergences in place. So that tells me that 2013 is probably not going to be a hot year for XOM, at least the first half of the year. Going into the daily chart, let's actually take a look at a 2-day period chart here. It's a little bit messy, but as you can see here, and I haven't drawn all these out, we have negative divergences. Price is making a higher high. If you look at this orange line defining these highs all the way back in early 2011, prices continued to make a higher high recently, a few months back, against a declining MACD and RSI. So that is negative divergence. And let's move this out of the way. And this is what the daily chart looks like. So again, XOM continues to lag the broad market on this most recent move up, and longer term looks bearish. Shorter term, I don't have too much of a read. The momentum's strong now. It's tough to fight this. Aggressive traders could, if you have a long-term time frame and some wide stops, you might want to try to start scaling into a short. But it's hard to say if this one does go and take out these recent highs. That would actually be a bullish event, and keep an eye on those longer-term divergences. If those are burned out or negated, then obviously that's a bullish event for the stock. Okay, this is CVX Chevron, which is the second largest holding in the XLE. By the way, the three top largest holdings, XOM, CVX, and SLB, Schlumberger, make up over 40% of the XLE. So this is, once again, just like the QQQ, is a very top-heavy weighted ETF as far as its top holdings. So that's why I'll spend 90% or more of my time looking at the top 5 holdings or so, and disregard the rest, because where these top holdings go, that's where the whole sector will follow, obviously. So this is a monthly chart of Chevron. And as you can see here, defined by the orange lines, we have this bearish rising wedge pattern, negative divergences in place on the MACD. Here's that ROC 12, rate of change 12, which has also done a pretty good job of defining bull and bear markets. And we're getting close. We're not there to the negative readings yet, but close. This is a key longer-term uptrend line, something to watch for if prices were to break this wedge, and these red lines would be support lines. So take a look at a weekly. This is actually a 6-day period chart, so almost a weekly chart. And as you can see, trend lines are simple and effective. Here's an uptrend line which broke back in 2008. Remember, the energy stocks went on well past the peak of the last bull market, which actually peaked officially in October of 2007, and it took all the way until nearly a year later before energy finally collapsed and actually peaked out, I should say, in June. And so here's Chevron Texaco. That's a breakdown there of that trend line. That gave us this downtrend line to watch, which gave us the next buy signal here. Since then, since the stock bottomed, back at the last end of the last bear market, it has been defined by this uptrend line. And as you can see here, we're clearly wedging up into a large bearish rising wedge pattern. And if you look down below on the MACD and RSI, very solid negative divergences in place. So again, it's my opinion that even though we are not far, and we had recently made some new highs, which we fell back below, even if we make another high within this pattern, I would say, looking at the charts and based on my experience, this stock is going to go much lower from where it currently is over the next 6 months or so. Daily chart, there's where we're at. We have a nice gap right here, and prices moved up to that gap. Let's try to take a look at that candlestick. Yeah, it looks like a nice little doji there. So this is resistance. These are your previous highs. So obviously a move up above that, let's call it 119 levels. It will be bullish, but again, we're getting very overbought. And what happens? There's you can have bullish price action on the shorter term patterns, and it all depends on your time frame, folks. If you're a quick, nimble trader, you want to get in and out of these stocks, ride this momentum, keep trailing, keep moving your stops up. But if you look at the bigger picture, in my opinion, it doesn't look so hot. So let's move on to the last one, and that'll wrap this video up. Schlumberger, SLB, and we'll just take a look here at this weekly chart. Large triangle pattern like so many other things, and within that triangle we have this downtrend line to watch where prices are currently pushed up against. So if we break above this downtrend line, then we have this larger downtrend line to contend with. Hard to really take anything from the MACD or RSI. From a daily perspective, this is that downtrend line. So traders might want to watch this chart replicate this. You have this peak back in late July 2011, and if we break above that, we've broken above this symmetrical triangle pattern, and that would be bullish. And if not, we might fail here.